looking over here at the DAX, obviously really nice move, but we were trading within the median of the margins here, so looking for a rejection from the liquidity high is really going to be the way to go on this one. Good morning, ladies and gentlemen, and welcome to this Friday's market closedown session. Early start today, team. I don't blame many of you for not turning up this morning. That's absolutely fine. The session is being recorded and it will be uploaded shortly so you guys can get it on catch up. Matthew, but almost dinner time, may not be able to stay the whole session. That's fine, buddy. That's absolutely fine. Honestly, I'm used to only having one or two people on a Friday morning generally anyway. It is a very early start, and for you, it's right in the middle of your evening. So, yeah, it's a bit of a difficult one for people. Good morning, Kai. Good to see you, mate. All right, team. So, obviously, this week marks the first full normal week back trading. We've reintroduced most of the trading assets. That entails the full rack of FX, metals, energies, and our indices, of course. It's been, I think it's been relatively good in terms of stock trading for sure. We have had a couple of decent sessions, but it's made the majority of the week's gains. It's not been so great on the FX side of things. We did incur multiple losses, UC, GJ, EA. We also took a couple of hits in the stocks, obviously, this week as well. Had a loss in the US 30 Dow, had a loss in the DAX as well, towards the sort of earlier half of the week, maybe Tuesday, I think it was. Weekly return so far is at around 2.7%, so that's not bad going at all. I'm not entirely sure how many trades that's over. We did get quite a good selection in the basket. Yeah, that's where we are. Yeah, that's where we are at the moment. This morning's European session is currently, if we go over here and have a quick review. So we did get some relatively decent moves, but unfortunately we didn't actually come to any of our major points of liquidity first. UK FTSE is ongoing, but it's looking very, very tentative at these levels at the moment. Like it could come back. I was ultimately looking to repeat what we had yesterday, today. So that it's not got the same kind of trading volume at all as it did yesterday, and it's very, very prevalent. We can see that. So I'm not entirely sure about just how much of a decent move we're going to get out of the UK FTSE at this time, considering we're already at 20 past 8 and the market's not really moving too much. Looking over here at the DAX, obviously really nice move, but we were trading within the median of the margins here, so looking for a rejection from the liquidity high is really going to be the way to go on this one. We haven't actually officially achieved that. I am looking for price to sort of break up inside this area first and then come back down, so that would be the plan of attack for this one. And then of course the EU50, which is very much the same as the DAX, except the EU50's hardly got any trading margin in it at all at the moment. Trading volume, sorry. It's hardly got any volume in it at all. We have just ranged excuse me, right through the open and continuing to do so far. So the front runner today is certainly the UK FTSE, but we can't exactly say the liquidity is looking good here. The money's looking good. The DAX is definitely the one that's won the best part of the move. But again, it's not actually reached any major point of commercial money, so we can't trade it. And that's basically where we are. So a little bit of a shame there with the lack of trading volume. I was hoping that we were going to get at least one more decent European session to get our teeth stuck into this week. And look, at the end of the day, we're not even at 8:30 yet. We've still got a good couple of hours for things to start stirring up a bit. So fingers crossed on the UK FTSE that picks up some steam. And it would be nice to think that the DAX could reach maybe 25.38 to 25.39, and then we could look to short that one as well back down to, I mean, frankly, looking to short it back down to here seems a little bit over optimistic at the moment. So I would possibly be looking to get out for the target at around 25.30 for a little bit of a shorter term trade, just to trade the sort of median of this range, even though we can clearly see the evidence that the market does like running to the highs and the lows here. Yeah, we'll just have to see how it goes. Recapping then on natural gas, we're off to a very good start this week with natural gas. Unfortunately, it did break back inside the range yesterday, so we got this really nice dip out. It went to 317, which is looking fantastic, but it was short-lived, and by 5 o'clock we were trading upwards of that 326 point of breaker structure again, and this is where we've ended up ranging throughout the evening and the Asia session, and yeah, obviously currently trading at 332. I have no fears, no concerns, or anything at all about natural gas. Still looking really good. Still expect it to drop off and continue selling into the weekend as well. And I would like to think that on Monday morning we could potentially see a decent bearish gap, arguably breaking through the new lowest low point there. And yeah, possibly seeing the market down at 315 or sub 350, which would be great. Moving down to gold. Obviously, gold is not running anymore, and I say not running anymore, it didn't trigger, is what I was supposed to say. I would like everyone to remove that as a pending order. Gold's just not doing anything. It's just got no movement in it at all at the moment. So there's no point having that one in the market, especially with the trading hours that we've got left of the day. And I definitely don't want to be in this commodity going into the weekend because of the potential for any major news from the White House administration and anything that may happen to do with Greenland or any other situation at the moment, because the weekend's really where it escalates. So it's just good to keep that risk clear from gold, especially at the moment when things are so heightened. Looking down at Aussie against the CAD, this one's doing really well. We are currently trading underneath this, which is like the bearish break of structure area. We have hit it once. We rejected it yesterday. The market's ranged since then. We're in such a decent amount of profit at the moment. There's really no cause for concern or cause for wanting to get out of it before the weekend's here. Even if the market gaps against us, it's not going to gap this much. We've got a really great amount of trading availability in here at the moment, trading margin. So there's nothing to do with that one. We just let that one run. And that's it. That's where we are. Now, on a Friday morning, I won't look to trade anything additionally. Friday mornings really are about having a quick catch up, think about how the week's been, looking at the data, looking at the trades that we've got ongoing, making any adjustments as is required, which we've kind of covered all of the basis on. I would just think, considering, this week is ultimately the first week back. Last week, yes, we were back last week and we did trade the US markets, but thinking about this week being the full week back, it's not been terrible. It's a little bit of a shame about the FX exposure, I must admit. It was, coming back on Thursday morning and seeing that, almost every single trade on the Wednesday was a loss, and taking a 1% hit was not great. But it is just part of the process. I'm not disappointed with any of the trades that were taken. We followed the plan. We had the plan, we followed the plan, and we executed it very well. So there was nothing wrong with that whatsoever. It was just one of those things. And yeah, I think moving on, we're just going to continue ramping up the trading volume. It is good to be selective in our trades at the moment, which we've tried to do, and we're still going to do. Next week, I'm certainly going to be a little bit more interested in trading UK Brent or US crude. I think these are finally getting a little bit more steam. And if we go on the 4-hour time frame, we can really see evidence of this. So I think next week we're going to be looking at a continued demand vacuum being caused, possibly looking for the market to rally back up to 65.50 to 66.50. And we'll be looking to execute these longs on this breaker structure point in here. And yeah, taking that back up to the highs. So that's one trade idea that I've already got in the pipeline. I would also like to think that gold's finally going to make a break for it. Whether that be a breakdown below the low here and we're going to trade it back down to 44.95, or alternatively, if we break through the ceiling at 46.43 and we finally get a continuation coming up to around 46.80, you know, which would be good. And yeah, that's about it, really. That's about it. So we're just going to wait to see how UK Brent does. UK Brent, sorry, UK FTSE does. It's not looking good at all at the moment. But stop losses are up here at around 10, 20, 22, 40, around this area up there. It is pushing back at the moment. Doesn't look great, but yeah, we'll see how it goes. None of the others are looking... Well, we can't do anything with the other European indices at the moment on that front. Kai says, Max, you said to remove pending order on gold. That's correct, sir. Yes. Well, yes, so you've got a choice of using either pending or limit orders. Generally, limit orders can be a little bit tricky for new traders. So it's wise for you guys when you're sort of, you know, at the levels you're at, just to use a simple reminder and then pending order strategy. So what you would do is when you see a red circle like this, you come down, you place the alarm. When the alert hits, then you place your pending order. But for me, I've got I can place orders with criteria. So for example, I can place an order in the market here, but it only triggers once this price is hit, for example. Now you should all have that functionality, but it can be a little bit tricky or confusing. So yeah, it's just a really efficient and streamlined method for new to intermediate traders just to use the alarm followed by a pending order strategy. And some other people do it. Yeah, that's fine. Yeah, of course. Yeah, definitely. Maybe consider that some weekend homework. Look into your market order types. And yeah, really begin to know how to use them to your advantage. Because the more streamlined you can make the process, the easier your life's going to be overall, right? So it's definitely something worth looking into. Yeah, I think that's about it, really, team. I think I've covered pretty much everything. We certainly can take another look at the econ for next week. So it's a bit of a busy week next week, but it's not huge. We've got inflation out for Canada, not CPI though. It's not all the CPI data, it's simply the inflation rate for Canada. Tuesday unemployment rate for the UK at 7 a.m, which we're not going to be affected by. Wednesday at 7 a.m, we've got inflation rate for Britain, which again, we're not going to be affected by. Thursday, we've got core PCE price index and personal income and spending for the United States. That is at 3 p.m. on the Thursday, which means we're going to probably be in and out of the US markets before that even hits. And it's not going to be a huge one. Core PCE might register, but it's monthly figures. I'm not entirely sure about that right now. Probably not going to register as much, maybe a 3 or a 4 out of 10, just as a guess. And then on Friday, we've got the Japanese BOJ, followed up by a 7 a.m. and a 9:30 a.m. print on retail sales and S&P Global Manufacturing PMI. So there's a lot of high impact news, but honestly, follow the market report, because the market report will give you a much, much more efficient and clear view of what's going to affect the markets, rather than, excuse me, these economic calendars that we use nowadays, which honestly just feel it's just a lot of noise. It's a lot of noise. So yeah, probably, we're not likely to see too much volatility next week or commotion in the market. So it's really going to fall down to hearing about the US in what they're going to do next. Ultimately, team, that's what it's going to come down to. Yeah, I think that's that. Yeah, I think that's that. So, are there any questions or anything, guys? Don't forget that I'll be back around. Well, I'm going to be, working on things all day long, but I will be sending out a full written report for the US Open this afternoon, so you will receive that. The written guidelines will be in the Traders Lounge, and the alerts will also be in the UTC Fund Alerts channel. Excuse me. All good? All right, team. Well, good stuff. We're currently at 31 minutes past the hour. And yeah, like I said, stay tuned for this afternoon. There's going to be trading opportunities in the US fired out into the channel. If you've got any questions or anything that you'd like me to look at, as always, it's an open door policy, so please ask away. And if not, then I wish you all a wonderful weekend ahead. It's been a really good week this week. I found there's been a lot of vibes, a lot of good vibes in the trading community, and a lot of engagement in the live sessions, which I do obviously appreciate, and it shows that you guys are making the most of your time here. So that's good to see. So if I don't speak to you again, have a fantastic weekend. I look forward to catching up with you on Monday, and if I do catch you again, then I'll catch you then. Cheers, guys. Take care. Bye bye.